Morning. This is Ron Janish here with andrewscourse.com. We're covering the pro course and we're covering the actual trades that we have on right now or that we put on today. Um, as you may remember in the previous video, I mentioned two very important rules and uh, and also there were four positions on. Let's take a look at what happened with those four positions. Okay, so if you remember, we were long the euro. And this is the day that somewhere around here is where we, let's see, was it 9th, 10th, 18th? Yeah, it was around here that we made the video. And as I said last time, uh, the probability was really high. It was going to make new highs, and breaking this line was just very, very normal. Okay, and we had three trades that were pretty much the same in that regard. The other one was the ES, and here's your daily chart. Let's see if I can break this down to an hourly. There we go. Well, let's see. Now let's take a look. Yeah. So we were somewhere around here in the last video, and up she went. And remember, we were looking for new highs above here and probably up to that line, and even breaking beyond the line, and it finally did. So there we are. Okay. Also, the third one, where we said use pretty much the same approach, was in the NASDAQ. Wound up being long around here somewhere, looking for prices to make new highs and very likely to go past this particular line that I had drawn. All right, so there we are. Now, there was a fourth trade that I had on that I showed you, and most of you aren't really interested in this, but here's what I recommend. Even if you are not willing to trade certain things with real money, do it in a faux account, in a fake account with fake money. The idea is that you get the proper practice. So we were here, and we're in this one here. The target's a bit different. Okay, we're looking for prices to make new lows, so below here, and we're looking for preferably a what I call some kind of three-wave down, and we've got one up and then down again is what typically occurs, but it may not. In this particular situation here, because we have a DT at this time, if this guy makes a new low, I would be very watchful for a buy signal, and then for a very, very strong buy signal at that. So I'll keep an eye on that, okay? Let's take a look at what's new. What is new? What's actually new? Okay, we got bonds and what's the other one? Silver, silver, silver. Here we go. Here's silver. Silver's down, still down on the day, down a tad, and wound up getting in late on this one here. 1709. Look at this, way up here. That's a lot. And that's not real good entry, but that's what happened. So looking for prices to make new highs. Okay, so above 1745 and probably break above the line here, which could easily bring it to 1660, 16 or 1777, somewhere up there. Okay, that's silver. And the other one is ultra bonds. And ultra bonds, another one which is a poor entry. It's way up here. Should have been up here, but sometimes you just sleep through it, and so wound up getting in late. Also, we're going to talk about money management a little bit and some ideas regarding that in a moment. So what you have here is you have a pattern which typically results in a three, 1, 2, 3 of some kind. It'll more than likely make new lows. But in addition to that, you'll have a pattern that'll last for several days. And if you have a pattern that lasts for several days, you may want to treat it differently than you would a pattern that is going to be a lot quicker. For example, the quicker pattern was an ES in the euro, in the Nasdaq, and in the silver. Okay, so those are the quicker patterns. This is one of the longer time patterns, and so this one and soybean oil would be treated the same. And the idea is that you take a look at how much your risk is, and you do a calculation of about 3 or 4 to 1. Okay, and possibly put on more than one position, one position per unit. What I'm doing here is simply putting on one position per unit, and just ones, and what's a unit? Well, a unit is an amount of money that's a comfortable number for you. So, for example, for some people, it's 10,000 or 25,000 or 35 or 50,000. When you have drawdown, which you inevitably will in trading, the higher the unit size, the lower the drawdown on a percentage basis. So depends on what you're comfortable with. So anyway, when you have a trade that you look at it and you say, okay, this one kind of like the soybean oil is going to be good for a week or so, then take a look at the idea of putting on more than one position, and do this keeping in mind your personal risk criteria and what you're comfortable with. Okay, so that's something important to do, and that's all we have right now. We do have other trades probably coming up later this week, but this is it for the moment. So I guess a little bit more information. Those of you seeing this for the first time, please see the other video, the one I made last week regarding the professional course. It gives you a couple of the rules that we use, which I think are significant, and also the requirements. Now, in addition to the requirements I mentioned last time, we've got one or two other ones for when you get to this level here. And what we'll do is we'll send you out a video of the signals that we use here in the part 2 of the program. And we'll send you, it'll have all the information you need on it. We'll cover it all. And what I would like you to do is go through historical data and find a good number of trades. Not just winners, but also see if you can find some losers too. Psychologically, that can sometimes be difficult, but please take a look. Please make sure you find some losers in this, and even though that's psychologically difficult, and we'll go from there. Okay. So this is for the professional course. Okay. And any questions, just send them to me, Ron Janisch. And you can contact me by just contacting support@andrewscourse.com. Thank you for your time and have a good week.